Hooty hoo, all my stock market gamblers. Welcome today. It's the first trading day of the year. Happy New Year to everybody out there. What's going on in the markets? Well, we got the first day, right? And here again, we're up about 100 points on the Dow, up about 100 on the NASDAQ. Now, it's been a little volatile session. The Dow has been negative, positive, and, well, we're staying positive right now. Let's see how this plays out. There's what's known as the January effect. How January goes, the rest of the market goes. Now, personally, I have a small short position. I just put it on the SPY. I have a small short position. I bought some puts. They'll go out a couple weeks. We'll see how that plays out. We're up on day one of the year. Okay, so now why am I thinking that there is going to be this inevitable pullback? And eventually I think there's going to be an inevitable crash. And I think it's all going to happen in the year 2022. 2022 is going to be a dramatic year. I think it's going to be a great year. If you're a trader, there's going to be volatility all year long, probably. Anyways, if you're a long-term investor, maybe the year ends flat. I actually think the year will end down. I think it'll end down quite a bit. But that's just my opinion. I'm a stock market gambler. Okay, so what do we got? Well, let's talk about this. The SPY is where I got my puts on. Now, the S&P 500, the PE ratio right now is 39 to 1. 39 to 1 for the S&P 500. Okay, that's like only happened wow, twice now, and the last time it happens right before the dot-com crash. Okay, so right before the dot-com crash, it was a little higher, but right now we're at 39 to 1. That's outrageous. Okay, what else are we at? Well, we've got this record high in margin debt. Margin debt is now $919 billion, almost $1 trillion in margin debt. People are out there gambling, and what margin debt does, it can make the stock market come down faster and go up faster. It can make it more volatile. Absolutely. Now, what brings the market down is these things called margin calls. When the market starts to collapse, there will be a lot of margin calls. This $1 trillion in margin debt is going to be called back in. They're going to take the purchasing power away as the market goes down. There will be margin calls. Now, there was only margin debt went up 60% from 2020 to 2021, up 60%. Now, that's only happened a couple times before. Once again, the big NASDAQ bubble, the dot-com crash that happened was one of the times. Another time was right before the great financial crisis. So we're in the third time where we've had this margin debt just take off, up 60% year over year. Okay, in 1 year, it's gone up 60%. Now, that's a lot. That's a lot for it to go up. Now, I think this market has actually got a little too complacent, and complacency has paid off. After all, I mean, we haven't had a correction for 21 months. All of last year, all of 2021, there was never a correction. Now, that's very unusual. Now, can we go all of 2022 without a correction? I'm willing to bet against that. Okay, that's my bet. And that's the first bet I'm putting on. I've got a small position on the SPY for the new year. We'll see how that plays out. But I'm betting that we cannot go a whole nother year without a correction. Matter of fact, I think the correction's going to come relatively soon, maybe even in the month of January. Now, we've been in this bull market. This has been the longest running bull market in the history of the United States stock market. 13 years without a bear market. That's incredible. A bear market on average happens about every 5 years, and we've gone 13 years without one. Now, since we have the longest running bull market, when the bear market finally gets here, I believe that will be the longest running also. However, I do believe the collapse will be quick, and the collapse will be about 50% right out of the gate. And this is just it's going to just break a lot of people. The margin calls are just going to be off the charts. People are going to get margin calls, and they're going to be very sad. Well, I don't think that's going to happen till summertime. And it could be postponed longer depending upon what the Federal Reserve does. I think the Federal Reserve is going to raise rates around summertime. Now, right now, they say they're tapering. I don't believe that for a minute, but they say they are. They're stopped buying bonds. They stopped buying mortgage-backed securities. Well, they not stopped. They reduce the amount that they buy. Well, we got this inflation just running crazy. I mean, if you look at last year, price of houses up 20%, but the price of food worldwide, not just in the United States, worldwide food went up 30%. Now, this is runaway inflation, in my opinion, but Federal Reserve, they're not going to raise rates just yet. They're going to wait till summertime, see what happens. I think they're going to get another wave of inflation. I think this year there's going to be more inflation than last year, and I think that's going to scare a lot of people. It's going to hurt the homeless. It's going to hurt the poor, the middle class. But the Federal Reserve, they don't want to do anything about it. They keep saying they have all these tools to fight it. Well, if you got these tools to fight it, shouldn't you start doing something? Think about that. Housing up 20%, food up 30%. Now they're going to tell you we're only running inflation about 5 or 6%. Well, they're just lying to you. They're flat out lying. Inflation's running at 15% if you measure it the way they did back in the 80s. Why don't we measure it like that? Why do we take housing out? Why do we take food out? Doesn't make sense. These are things that everybody buys. These are things that everybody needs. Once again, housing up 20%, food up 30%, but inflation's only at 6% according to our lovely government. Well, they can lie to us all they want, but we go to the grocery store. I go to the gas pump. It's still $5 a gallon here. Now, I live in an expensive area. I know a lot of you are paying around $3, and that's good. That's good. That's not that outrageous. But I think it's going to get worse. I think we'll actually see $10 a gallon for gas. $10 a gallon is going to wake a lot of people up. They're going to go, wait a minute. Something's wrong. Something's not right. Now, okay, so what do we got? We got this complacency in the stock market, but we got these headwinds, okay? Okay, the stock market keeps going higher, but we have these headwinds. The pandemic, yeah, okay. All right, and inflation we just talked about, okay, that's a headwind to the stock market. A lot of people think that inflation's good for the stock market, but it's really not because it hurts corporate profits, and when corporate profits go down, the stock market tends to follow that. Now, we're going to have cheap money. If they got cheap money, they're going to continue the cheap money, okay? So they say they're going to raise rates. Maybe they do, maybe they don't. I don't think they're going to get more than 1 or 2 rate hikes before this thing implodes. And then when it implodes, they're going to go back to zero. Okay, so they say they're going to raise rates, but I don't believe it. I just think the market has gotten too complacent. So you got record margin debt. Okay, so you got record number of calls being bought. You got the S&P PE ratio at 39. Now, in 2021, there was also record buybacks. Now, record buybacks, what does that mean? What exactly does that do to the stock market? Well, when companies buy their stock back, it makes the stock go higher, and there was record buybacks in 2021. $850 billion of buybacks. Now, where'd they get the money to buy their stock back? Well, the Federal Reserve, they kind of give it to them pretty close to free, pretty close to 0% interest rate. Companies like Apple, Google, Facebook, Microsoft, they can go get this money from the Fed. They can get all the money they want. They can buy all of their stock back if they want. They can make their stock just explode higher, and that's what they're doing. That's what the CEOs love that, though. They get bigger bonuses, right? So buybacks were a big part of this market run-up. Now, like I say, will it continue this year? Will it be more of the same, more of the free money from the Fed? Probably more free money, but I don't think it's going to have the same effect. I think the Fed's going to print the money. I think they're going to print money like crazy. They may even start stimulus checks again. I just don't think it's going to have the same effect on the market. This spending bill, they want to put another couple trillion in. Maybe that helps the market, but look, It's like a drug addict. They need more of this free money. They need more cheap money. And I mean, I'm not talking about just 2 trillion, just 4 trillion. They need 5 to 10 trillion this year. And the Federal Reserve may do that once they see the market collapse. They may pump in 5 trillion, 10 trillion, fresh new money. That would make the market go up, but it'll make your purchasing power just collapse. Well, this is, I know some of this is just gloom and doom news, and it's a new year and everybody wants to be happy. And where are we? We're happy. The stock market's up today, right? Up 100 on the Dow, 100 on the Nasdaq. We'll see how this plays out. First week of January. We'll see. I'm actually thinking we're going to get the pullback. I think we're going to get the correction. I think we're going to get some nasty red lines on those charts that everybody looks at. Right now, the lines are green. They're all going up, Those red lines are going to look real nasty when this comes back down. I'm Tall Mike. I'm a stock market gambler. If you like this, give me a thumbs up. Really like it, punch that subscribe button. We can talk more about how this year is going to unfold. Get out there. Have a great Monday, everybody. We'll talk again soon. Bye-bye now.